Hello everybody, Tortoise Investing coming at you today with 3 of the best stocks to buy now or put on your watch list. Now, if you are new to the channel, hit that like and subscribe button for me. I would greatly appreciate it. I show off my portfolio every video, and I go over 3 holdings at least once a week, sometimes twice a week, that I think are reasonable or great entry point values. And you can take a deeper dive into them. We use Qualtrim Insight here personally and see if they fit for you. I'm not telling you to buy these that you are guaranteed to get a million billions, but these might be something that interests you and you can do further research. Now, this financial advice always your research before investing. Without further ado, let's go. Portfolios, how things are looking. Did open up a position in Apple and Google. Added a little bit more to Ulta and DCA down in Celsius. Am I in full panic mode that I'm down 20% in Celsius after I hit my price target initially of $65? No. Loving it. Buying more. Get paid in 2 weeks. If it's still sitting where it's sitting, I'll buy some more. Fine by me. Love the company. Very confident in them long term. I am an avid user of Celsius. I use their products every day. I like the growth and the future projections for the company. But yeah, everything else looked pretty good. United Health, our biggest winner at 21%. But I'm definitely looking forward to adding more to Google and Apple, and hopefully at cheaper prices. Got in $165 on both of them, and I absolutely know, almost for certain, that they're going to fall more. And that's fine by me. I'll just buy as it drops, and then in 15 years from now, I'm going to be happy I did. But today we are going to be taking a look at Booking Holdings, Lululemon, and Google. Booking Holdings here. Adjusted free cash flow yield of 6.28%, dividend yield of 1.05%, and a payout ratio of 12%. We will take a look here. Year to date down 4% over last year, up 2%. 5 years, 86.07%. This thing did crack the 4K mark, and it looks like it has fallen down to 3,300. Let's take a look at the revenue, growing at a rate of 12% over the last 10 years. Very nice. Revenue by segment, as you see here, is growing. It's 2020. Of course, they're going to have a dip. Booking Holdings, Booking.com. It is one of the big players in the like booking a hotel motel market. Room nights sold, as you see here. The free cash flow growing over the last 10 years at a rate of 12.18%. Very nice. And check here at the adjusted. That means they buying back those shares. EPS growing at a rate of 12% as well over the last 10 years. This company buys back shares aggressively, and I love it. It's one thing that I really like about this company. Now, let's take a look at the quarterly so we can see it updated for the debt. They have $16.33 billion in cash and $13.36 billion in debt. Not an issue. You got more cash than debt. Good with me. Now, they just started paying a dividend, which is pretty nice. I mean, it's $8 a share, but the stock's over $3,000. But they did start by a dividend. Over 1% yield now. It just takes up 12% of their EPS. Not a problem. Now, oh yeah, look at that. Woo, I love that. If every company I bought looked like this. Over the last 10 years, buying back shares at a rate of 4%. Over the last 2 years, over 8%. They are demolishing that share count. So they are currently at, let's see here, currently at 34.27 million shares outstanding. And we're going to go back 2 years at Q2. And they were at 40.6. So they've bought back about 6 million shares. And you might be like, 6 million shares? It's over $3,000. but their PE ratio is still very, very good. This looks like a stock that is at a good price. And you can see profit and operating margins are really good with this company. Return on capital employed, I know it's going to be pretty. Look at that. 53%. That's what's up. Of course, they had COVID in the year after COVID. A little bit painful, but this thing hovered around in the 20s and 30s for a while, and now it's just skyrocketed because they are just buying back shares aggressively. EPS growth, 126 growing to 198. So I think that's some double-digit growth right there. And revenue, 2303 grown to 2496. So increasing there as well. Next up, Lululemon. This thing it's had a rough time. It has had a rough time. Adjusted free cash flow yield was set at 5.5. They do have a little bit of debt on the balance sheet here. Let's take a look. Yeah. 1.15 billion in debt. They have 1.19 in cash, so that is not an issue. But yeah, year to date down 53% over the last 1 year, 38 over the last 5, up 35%. Now this thing has fallen and fallen hard. This thing was over $500 at one point. Now we're setting at $236. And I'm watching this one pretty closely. The Lululemon, it's a pretty big brand in athletic wear. It's not a small company by any means, over 29 billion market cap. Profit and operating margins are pretty decent too, 16.8 and 19.6. Revenue's grown at a rate of 21.52% over the last 10 years. That's pretty good. Free cash flow, 24.29, adjusted 25, so they are buying back a little bit of shares. EPS 20.76. There's a lot to like here. A lot of things are ticking in the right direction. Cash flow is growing, which is nice. The shares outstanding are decreasing over time, which is nice. And they've got a really nice return on capital employed. Look at that. 40.43%. Last year it was 32, 37, 24, 33. You get the picture. So this is one that if we go into a recession, which everyone is like terrified of that. They think we're in the middle of one right now, and that it's only a matter of time. There's talk that the Feds are going to cut interest rates in September. It might not even be by 25, might be by 50 basis points or one whole basis point. Who knows? All I know is as things continue to drop, I will DCA through them. If I like a company and I'm happy where I buy it at, and then I can get more later cheaper, heck yeah, I'm about it. But yeah, as you can see here, been pretty red in the markets here lately, and I'm loving it. Anyways, EPS 14.17 growing to 15.84. Nice little double-digit growth out of that right there, and 10.70 in the revenue billions, growing to 11.66. I think if I'm mathing, that's almost 10% there as well. But yeah, Lululemon may be something to keep on your radar, especially if you're looking for an apparel or a retail type company. I know I like where it's going, and that's down, so I can buy some cheaper. But this is definitely one I've got on my radar. Now, next up, the one I bought into, I did buy some Google. Love this company. Love this company. Just free cash flow to 1.86%, dividend of 0.48%. Takes up only 2.8% of their payout of their EPS. Profit margin 26.7, operating margin 32. Beautiful. Year to date, we're up 20% over last year, 26 over last 5, 188%. Beautiful. The people that bought back in here, y'all out there that got these beautiful shares at $80, you did the right thing. I didn't have the stomach back here. I have learned a lot since then. You know, I got into investing in 2021-ish. So I went through the downs, the real big ups, and now we're going through a down cycle again, I think. So I've learned a lot, and I know when to gobble up some good companies, and I did with this at 165. Again, don't buy it because I did. Revenue over the last 10 years, grown rate of 17.78%. Nice. Revenue by segment, as you see, this is increasing. YouTube's just huge for them. Their cloud operating margins are now positive. That is very good. This was a very negative margin business for them. As you see, this is now ticking in the right directions. Going to help them get even more cash flow. Speaking of cash flow, 19.92% over the last 10 years. That is awesome. EPS, 19.83% over the last 10 years. Their debt, let's take a look at the quarterly so we can see the most updated. They have $100 billion in cash and $10.96 billion in debt. Not a problem. Not a problem whatsoever. And as you see, the dividend, they did just start paying a dividend, which I called. And people said that I was silly for calling. I called it a month before they started or announced it. Pat on my own back. But yeah, 20 cents per share. I got crazy for saying that. Shares outstanding. I probably should have kept it on quarterly here. Boop. Decreasing at a rate of 0.9% over the last 10 years. As you see, over the last 5, been buying them back at a rate of 2.25%. And I'm hoping that they use any downturn as an opportunity to gobble up even more shares. Let's see here. The start of 2020, they had 13.85 billion. They now have 12.5 billion. So they've bought over the last 4 years over 1.3 billion shares back, which is just awesome. And lastly, let's take a look at that return on capital employed, which is also beautiful. 2021, 26, 2022, 25, and 2023, 26%, which is very nice. EPS 704 growing to 871. Very strong growth out of that, and our revenue is 328 growing to 386. Again, double-digit growth from there as well. So it's three of the best stocks to buy now to keep on your radar. See if they might fit into your portfolio. Again, do your own research. I'm not saying to buy these. It's just 3 that I think are pretty good prices. I'm not a professional or anything by any means. I just like making these videos and looking into things and putting them out for you. That's everything I got for you. Make sure to hit that like and subscribe button for more. And until next time, take care. See yous.